Hey everybody, GM, welcome back to the channel. Today is Friday, the 10th of January. The US stock markets, ETF markets are back open today, and we've got some big data as well coming out this morning, American time, the non-farm payrolls. So it's probably going to be a pretty big day. Obviously, the major stock markets were closed yesterday, so let's jump straight into it. And as we can see, Bitcoin has come down. It has swept the month's low, so it's actually put in a new low for the month of January. Obviously, the yearly open was back at around sort of 93,300, and we've come below that, reclaiming it so far today. So we've actually found a bit of support off a couple of diagonals. We've obviously got the long-term diagonal, which connects the high from the last bull market, and we've got this down sloping diagonal as well, which has been an interesting area, a sort of pivot area for price. Obviously, sort of we've had it as resistance. We've now sort of been finding support on it really ever since the start of December. So we continue to find support on that diagonal, and obviously this confluence here is what has allowed us really, in my opinion, to get a bit of a bounce, to see some buyers step into the market. If we just go over to the futures chart as well, I think we've got the 50-day moving average on the CME futures as well coming in to support price. And if we just look back at this moving average, we've seen in the past it has sort of supported price for us, just kind of going back over the last year. Bitcoin has liked to sort of hold this as support when it was previously sort of trending up. So let's see if that holds us for now. Obviously, it might not do. We might come through that. And like I say, if we just go back to the main chart here, the area that I was thinking we could come down to next is 85,000. This is where the 100-day moving average is. And if we just look back at last January, we can actually see we came down and tested that 100-day moving average on the spot price pretty much to a T. Nice wick below it. And from there, it was pretty much up only for the next sort of 1 to 3 months. So looking for something similar to happen, really. I think a reconnection of this moving average, if that was to result in anything like happened last time and we got some nice movement then to the upside, I think most people would probably take that. Obviously, in terms of my own situation, own positioning, I had to sort of de-risk a little bit yesterday just as we were starting to come off, but I'm still very much long this market. And what I've done myself really is just position or get better positioned for a move down to 80, sort of 7 down to 85,000. Really, for me, I just want to make sure that I'm well prepared if this scenario does occur. I think with coming down to this level once again, a full flush of this level might be needed. Obviously, it would be very, very scary, but that might be needed. That might be what we want to see to actually get that full reset. And talking of full resets, we can actually just look at the liquidation heat map here. We can see that Bitcoin has taken out most of the liquidity to the downside. Really, all of the liquidity remains higher. Obviously, longs been nervous to jump into the market ahead of key important economic data coming out of the US, non-farm payrolls today, employment, or should we say inflation. So today is going to be obviously an employment number, but next week on Tuesday we have inflation data coming out on Tuesday. So yes, market makers now looking to target probably stops to the upside. Obviously liquidations ahead above price, and what I'm thinking is we could probably see this squeeze a little bit higher, maybe going up to sort of 96,000 just ahead of the US Open. Then I think probably at the US Open, we might come off. Obviously, we had a big day of outflows. This is back on the 8th, obviously the 9th. Yesterday, US markets were closed for the funeral of Jimmy Carter. So We're going to see what happens today, but I wouldn't be surprised if we see some more outflows today from the ETFs, which could result in us coming down. Maybe we retest the low. Let's see. Obviously, it'd be good if Bitcoin can show some strength and remain a bit higher and start to really consolidate from here and work its way sideways. If we just go to the other chart here that I actually have the path drawn out on, then we can see that obviously we're still following the magic blue line. I'm starting to think that it's more likely from here we maybe see something like this. Like I say, a move down to this 100 moving average, back up, some sort of final retest or higher low, put in above 90,000. And then from there, we get the extension late January going into February time. Obviously just going back to where we were with this, but yeah, I'm thinking really we probably get a bit more consolidation before sort of seeing this move up. Obviously this path isn't exactly invalidated for now. I will keep it on for now, but it's likely over the next few days, if we obviously lose this trajectory higher, then I will probably redraw this. And to be honest with you, what I'm expecting to see would be, let's actually get the let's get the path tool on if I can remember where it is. What I'd be expecting to see from here is probably, like I say, a bounce. Maybe we get a little bit higher to around 96,000. So that's about 1,000 higher from where we currently are. Maybe we then see a move down towards that 100-day moving average. We run back up, higher low, and then we sort of go higher towards, our previous target. It probably wouldn't happen in one move, but potentially we see something like that. And I think to myself, this is probably, I guess you could call this the more bearish path, but see if I can settings. Let's see if I can change the color of this. We could probably do sort of like a red path. I don't really know if it should be a red path. We can color one of these green as well. So I don't really like that green color. Let's see if I can find a better green. There we go. Should this be red? Well, we should do it blue. Yeah. So let's do something like that for now. Obviously, we've got the most optimistic path, which is decent unemployment figure today, good inflation number on Tuesday, and markets start to rip. And this was the big shakeout. I do think, however, the most likely path is something like this blue path. Of course, we could probably do a red path, which comes down much lower to connect with this 100-day moving average before going higher. But let's hold off on doing that for now. Let's remain optimistic with our paths and say, look, this has served us fairly well up until this point. Like I say, based on the fact we'd made a slightly newer low, we just have to be realistic. We have to be open to the fact that this could go a bit lower. And we just want to be prepared. I mean, being a trader is all about being prepared. I've always said, and I've been saying this, if you've been watching my videos since November and early December, that I do not think, I'm pretty sure I said it around here. I do not think Bitcoin will go below 88,000. I thought high 80s was probably the lowest we go, and we're still above that. We're still holding this trend line. Like I said, I don't want to see this long-term trend line break. I think that would be very, very bad for price if it did. I think if we did get below this, it would be very, very short-lived. So really, let's see where we go from here. Obviously, yesterday was all this panic about the US government selling Bitcoin. I do think that will be absorbed quite quickly. I do think if that were to happen at any point from now over the next sort of week or two, then it would be a sort of a buy the fact opportunity. That would be the time to really get aggressively long, because I think it is likely that overhang that has obviously weighed heavily on this market it's a combination of that and also the economic data that we've got coming out. So yeah, obviously green start so far today. That's positive. Good to see. Let's see where we go from here. I'm just trying to see if we have up here. I wanted to see if we have the fear and greed loaded up. I'm actually gonna do this now quickly. Fear and greed for Bitcoin. Right, fear and greed Bitcoin index. Because I do believe that the fear and greed has come off. I'm pretty sure it's this one that is the most common used one. And we have finally started to come down on the Bitcoin Fear and Greed Index. So we're down at 50, which is now neutral. We had been greed yesterday. Last week we've been in the 70s, dropped into the 60s, and this is a fairly big drop now down to 50. If we actually look at the fear and greed over the last, if we actually look at, if we go all the way out, the maximum fear and greed, we can see that in the past, in previous bull markets, obviously throughout sort of late 2020, if we go 4 years back, obviously end of 2024. So if we go to the end of 2020, we can see we did have some dips down to the 40 range. There were other dips that took us down to the 50 range. So, I mean, we're down at the 50 range now. We're getting very, very close to where you'd expect us to be to get a big, big reaction from. So, obviously, we were holding the majority of time up around the 70s, 18s, but we had a couple of, you can see them, a couple of spikes down, one down to 40, a few into the 50s. And like I say, we have seen the spike down into the 50s. So this for me is encouraging. A lot of people have been looking at this, myself included, saying, what is the one thing that's still a bit overheated, that is still making me nervous that we might go a bit lower? It is that fear and greed index. Doesn't want to come down. It's still showing us as greed. Obviously, now it's come down to neutral. So things are looking fairly healthy to me in terms of this being a full-on reset of the market. And like I say, do we blast off higher here? Do we spend another sort of day or two? Of course, a week or two sort of chopping. Of course, it doesn't have to go to new lows. We might make a slightly higher low. This might actually form a path more similar to this if it doesn't get taken out. Obviously, I'm just trying to go with, slightly more of a not more of a bearish scenario, but I guess a slightly more pessimistic scenario right for now. I've just been as conservative as possible. I really do think that throughout this area, and obviously I've drawn it on our other chart here, this is the zone where you want to be looking to accumulate Bitcoin. This is where you want to get your buys in before the next leg higher. And like I say, I do think come February time, we are at new highs for Bitcoin. So until the charts and the data tell me something otherwise, then I'm going to believe that we are still going to go higher. Obviously, we spent a fair bit of time on Bitcoin on this stream, so let's just very quickly take a look at Ethereum. Again, it's just going to follow what Bitcoin does, as with the rest of the market right here. But we can see Ethereum down into its value area. It's trying to bounce from there. I'm personally positioned for Ethereum to come all the way down, worst case scenario, to 2,800, even into the 2.7s, I think is the absolute worst case scenario. If Bitcoin does flash crash into the mid 80s, potentially Ethereum pulls a similar move. I really can't see it finding price acceptance below the election levels, below 2,826. That is that high, 2,810. I really cannot see Ethereum trading below here. If it does go down to these levels, that is going to be a result of liquidations of traders that have got their stop losses below 3,000, and potentially it has a spike down, it has a capitulation week down. That would give me really confidence that Ethereum is going to be a strong long then, and we can look for much, much higher prices. So for now, it's digging in, it's holding on. Can it turn around from here? Yes. Can we potentially get another small flush lower? Yes. Could we get a larger flush? Yes. But I still remain of the view that anything really down to, like I say, 2,800, 2,700 is going to be a really, really good buy for Ethereum. Again, personally, I'm positioned for a move, one more move lower. It goes without saying, I think as a smart trader, you have to be. I mean, if you've got all your chips on the table here and you're fully invested and you've got a liquidation price above 3,000 or really anywhere above 2,800, I think you're asking for trouble in a way. Of course, you might get let off the hook and we might just turn around from here. But really, we're looking to manage risk, and in these sorts of situations and environments, you have to manage risk. So, like I say, I've de-risked at these prices, very similar to these prices yesterday. I've de-risked very, very slightly just to make sure I'm not going to be uncomfortable if we do get that week lower. I just want to take absolutely no risks of getting liquidated. That really is the most important lesson. If I can get any lesson through to any trader that's currently trading these markets, just do not get liquidated if you're trading on leverage, or stick to spot. Solana as well. Obviously, we're currently on a higher low from the previous low. Can we get a flush down or a wick down to 172? I think so. I think that is a definite possibility. And I've got orders down to 163 on Solana, which would actually be a retest of these highs here. This is pretty much the mid-range from our previous consolidation that we were in. So I'm actually going to put that on this chart as a horizontal, just so we can kind of keep a track on what happens here. But I'm not expecting Solana to trade below those prices. Like I say, again, coming into pre-election levels, back down basically around its yearly open. Yeah, those are the main levels I'm looking for if Solana does go lower. Obviously, I'm hoping and looking for it to hold 180 and hold this descending trend line. But if it does, we've got around about 172, 173, and we've got around 162, 163 that I have some orders in on. Just quickly going back to Ethereum, I've got orders around 3,000 all the way down to 2,700. I've got orders like every sort of $100 or so, and just going back over to Bitcoin, like I say, on Bitcoin, orders down to sort of 88,000 all the way down to around about 85, I think is on the cards for Bitcoin. Just checking the other couple of charts. There's not really too much to say. Yeah, I think potentially down to 88 on Bitcoin. So very quick look at the traditional markets. Obviously, this is running on a little bit longer than I wanted to. We can see, I think the dollar's trying to put in a top here. So with Trump coming in less than a couple of weeks' time now, I do think he will want a relatively weaker dollar compared to where it is right here. And he will try and probably weaken the currency. So it will help accelerate economic growth in the US. Obviously, right now, a higher dollar puts pressure on the US exports, it puts pressure on US growth. It actually helps put a bit of pressure on inflation as well. So, obviously, if a currency is exporting less, then there's less demand for those goods and services, meaning there's less demand, pull inflation on prices. So actually, this could be the silver lining on the dollar strength, could be that it's actually helping do us some favors with keeping inflation at bay for now. So let's see if inflation can stay within expectations for next week or even cool. That would be really, really bullish for these markets. Looking at the Nasdaq, pretty much flat yesterday. Obviously, stock market not trading, pretty flat today. So obviously, we've said stock markets will likely give crypto some direction, looking for stocks to get above this descending trend line to then go bullish again. S&P is going to be a similar picture, I think. Yeah, pretty much identical price action over the last few days. So let's see if S&P can get above this descending trend line as well. And I think I'm going to wrap it up there. So, like I say, It's probably time to be a little bit defensive. Obviously, I have been saying buy the dip, buy the dip. That is still the that is still the message. That is still what I'm doing. I am buying the dip. I did buy some more spot crypto yesterday, even though I lightened up on some leverage positions. So yeah, I still think if you're on spot, you want to buy the dip. If you're on leverage, be prepared for one more leg lower. Probably de-risk a little if you need to, if that's going to put you under some pressure, get some orders into the order book. That's what I've been doing. I am prepared now for another flush slightly lower, but this could go one of two ways. We might see a move down to 87, 88,000, as low as 85,000. We might just come in and hold this low and sort of grind things out. Anything can happen with this economic data. Obviously, if the economic data is really bullish and we see a breakout in the stock markets, don't be surprised if Bitcoin really gets going aggressively to the upside. Obviously, we have seen the fear and greed come down. We have seen the liquidity below price completely evaporate from the market. So traders are either shorting or they are been refraining from putting on longs. That means when traders do get a bit of confidence and start to come back into the market, I expect this market to accelerate higher fairly quickly. So I'm going to wrap it up there. Have an amazing day, everybody. Stay safe out there, and I'll talk to you all on the next one. GM, GM, GM.